Sometimes if you don't get to the break, the break and yeah. Okay, no problem. All right, okay, somebody. Right, it was due to network. If you have joined, say I please, so that we can continue from equal I equal name liquidity. Oh, if you have joined, say I please. Let's continue. We get to tell you stuff.
Pen. Even 7 you can start because you are not with them.
You don't understand. If you have joined, say I please. Let me know. If you have joined, say I please. If you have joined, please say I. If you have joined, say hi. We had the network glitch, so I had to send you another link. If you have joined, say hi. Okay, Taiwo are they leaving? All right, so let's continue from where we stopped. We are talking about equal lows and equal highs. Okay, can you please, if you can hear me, just type I can hear you. Okay, Victor level 2. We had network issues, so I had to send you another link. Okay, so let's look at um, equal low and equal high liquidity. Now it's very simple. All right, if price is bullish, am I- so let's say price is bullish, all right, and then price has broken this structure now. Most of the times, what price will do after its break of structure, price will for price to pull back and then start buying. All right, for price to pull back and then start buying, please, I'll teach both of them at the same time. So pay attention. So as price is pulling back, let's say you marked your area of interest here. All right, place where you want to buy from. We are looking at equal lows and equal high. Please pay attention. So most of the time, as price is coming down, price will come this way, push up, come this way, and then push up. Even break, sometimes break this structure, and then come back to tap you in before buying. This, I told you, this is not a change of character. All right, maybe inducement can be next week. This is not a change of character. All right, it's not. So take note of that. So you can see that below below this you have equal lows here. They may not be this equal low, they can be slant, they can be tilted. If they are tilted, we call it relative equal lows. If they are equal, they are called equal lows. So below all these lows, below these equal lows, we have people buying. Somebody bought from here, somebody bought from here, as price came again, he bought. So as price is pushing out, he's happy. Expect price to come and take him out before you buy. All right. So that is equal low liquidity graph. So this is equal low. I'll flip it so that I will not be drawing. So now this is equal low. So as price come back to take out that guy, to take out this low, you can expect price. All right. So this is very very explanatory. All right. I can show you. That is one benefit of the live session. Okay. So this is for a bullish pattern. All right. Trend line. I mean, yeah, equal low liquidity graph. All right. All right. So this is an example of this guy is an example of equal low liquidity graph. All right. You don't want to start buying from that area, or else you lose money. So on the flip side, let me flip it. Want to start from. On the flip side, for equal highs, you can see here that as price as price broke structure here, bearish. This is on the flip side. Always take a screenshot to take a screenshot. Don't just be looking at it. So as price broke this structure here, this structure here, price went up. This where you want to sell from, but price did not go there. Price came again, forming these equal highs. So as price broke structure again, expect price to go back there and tap it in so that you can sell. So that is all about equal highs and equal low liquidity. Now the idea behind it is that people are buying from where price has not reached their area of interest. That's what I showed you the first time we started this analysis. That wait for price to tap you in. So this is an example of equal low and equal high liquidity. Let me draw it so that for a bearish trend. Let me draw it because I cannot be flipping. So as price is coming, price can do this and do this. Expect price to come back there and then tap you in. Okay. So after this break of structure here, after this break of structure here, all right. After that break of structure there, let's say you are bearish, so you done your analysis. Take note of that. You mark out your area of interest, your bearish block, where you want price to come to before you sell. But before price get there, price form this equal highs here. Equal highs are found when you want to sell. Equal lows are found when you want to buy. All right, it's very very clear. Okay, so price had that liquidity because somebody is buying, is selling rather, is selling from here, from that high here. Some other person is also selling when price pull back here, here. All right, somebody is selling from these two places. So expect price to come and take them out. So your sell limit is just here. You put your sell limit there. All right. Put your stop loss where is very nice for you based on your risk. Your stop loss there, and then you target the recent low, which is here, here, this low. That is your target. So this is very explanatory. All right. Please, if you understand equal low and equal high liquidity, just type liquidity in the in the comment section. If you understand equal low and equal high liquidity, just type liquidity in the comment section. We have only 4 persons here.
6 persons.
Okay, 6 persons. You are quiet. Please, if you understand equal low and equal high liquidity, please, okay, liquidity. Please, people should learn to communicate. All right, it is for your own good though. I can decide to stop it. It's my energy I'm using now. Liquidity. It's my energy I'm using. So just type it. There is no big deal there. If you understand equal highs and equal low liquidity, in line with your higher highs and lows and bias on the 4 hour, 1 hour time frame, you make a very good trade. All right. You can identify it on the 4 hour, 1 hour, any time frame. Okay. Taiwo said she understands. Uh, Ozimedis Samuel said you understand. Okay. All right. We have 7 persons here. Only few are commenting. Only few are commenting. Only few. All right. So let's identify it from the chart. Let's go to the chart. Let's go to the chart. Let's find it. Remember, after a break of structure, you expect a pullback. If you don't see it there, you will see trend line liquidity. You must not see it every time. Okay. Hmm. For you to be able to identify it, this your cursor is very important. You see that line, this line is very important. You want to just look for 2 weeks that are equal lows. Now let us concentrate here. Let me expand this. This trend is bullish. All right, it's bullish. So if you are in a bullish trend like this, let's say, eh, okay, so let's say, pay attention. Oh, price has broken this structure, break of structure. So you expect a pullback, abi? You expect a pullback before you continue that trend. All right. So this is a break of structure, bullish. This on the 4 hour. Oh, it's on the 4 hour time frame. So you want to mark out your last candle there. All right, before price will tap you in, abi? Now, why did price came down here, like broke through this level? Is because of liquidity. Now, take note, if you are buying, write it down. If you want to buy and you're looking for equal low liquidity, that liquidity should be above your area of interest. I repeat, if you are buying, that means you are looking for equal lows now. your bullish order block, your bullish order block, which is your last bearish candle, that that equal low should be above it. So that price will use that as a magnet area to tap into your order block before buying. I will take it again. Write it down. When you want to buy, make sure that your equal low liquidity is above your point of interest. Then if you want to sell, make sure that your liquidity is below your point of interest, is opposite. When you want to buy, it should be above. When you want to sell, it should be below. All right. So that is it. You see the same thing as trend line liquidity. You see the same thing. So now, yeah, why the price come here? Let me expand this. Look at it very well, though. I'm sure you are seeing it. You can see that we have this block here before price should tap and then buy. Let me make this black so that you will see it. And let me make that line thicker. I mean, thinner, like this. Please, let me go to the comment section. Don't worry, Francis. Once I'm done, I'll send you the replay. You can go and watch it. All right. Now, please, look at the chart again. Look at that chart. If you can see that line there, the horizontal line there, just type H. Let me know. I'm sure it's clear. It's clear. So there's no need for you to type. So let's go to the chart. Now, look at this low here. Look at this low here. And then look at this low. This week, it's not this week, oh, this small week here. Let me expand this in. You're seeing it now? Okay. Look at this week, these 2 weeks, this bearish and bullish week. And then look at this red candle week. It's not this long week, this red candle week. They are equal, right? They are called equal lows. EQLS, equal lows liquidity. All right. So you can see that these two candles and this last bearish week candle, the week, they are equal. All right. Then what happened? This guy, this, hope you are seeing it. This bullish candle came and sweep them and then pushed. All right. What's up on that one? Now, after, hope you are following. Like, like I just can do week, and look at the week of these two. They are equal, isn't it? So whenever you see this in your point of interest, it should be above it. Remember, you should buy from discount. So expect them to be swept. That's why this candle came and swept it. Swept it to where? Let's find. Where the price go to. Price, take note that this is your 4-hour time frame. Oh. Price came to this last candle, this last bullish candle there, and then bought. All right. Price came and tapped into this last candle here, because this candle on the lower time frame, there is a bearish candle there, but let me stay there. So price came after sweeping this equal lows, which is liquidity. We also have trend line liquidity here. Take note of that. This is it here. This is also trend line liquidity. I've thought about it. which price came to sweep before buying. But I'm looking at equal low now. I've talked about that. You should be able to identify it. So what happened after this equal load were formed? Now after you see this, you want to mark out your point of interest close to it, which is that price came back. This last candle here, this bullish candle here, came back and swept it and then wicked up. All right. So that is one point of interest. That is where you should buy it. Now, why did price come back again? Yeah, like after price has pushed up, why the price pull back again before buying? I will show you again. It's because of liquidity, equal load. In fact, between the three, just equal and equal eyes are very powerful. I hear what I'm saying. Now, why the price come back? Let me take this out. Why did price come back here? Those persons that are not in class, nobody should DM me and ask me question. No. Now, this equal low, these guys, 1 2 3, if you look at it, it's just 3 weeks. All right, we have 1 and 2 week, and then yeah, we have 1 week which price has swept, so it's 3 weeks that make up that equal low. There it's not only three that make it. I'm just showing you that for now it's three. Now why did price come back here? Why did price fall back and then weak before pushing? I will show you now. Pay attention. If you look again, okay, let me use this. Let me see what the price is reacting from somewhere. Okay. Hmm. Pay attention though. Now, pay attention. Now, after you marked out this area, you are bullish. After you marked out this area of interest now, you saw equal low liquidity. Price just swept it. Price now push up this way. Now came back again. To do what? To sweep another equal low again. Where is it? Where is it? Look at it again. We have three sef there. Let me something like this. It's okay. All right. So now you can see from here you have this low this week that had this your block is one. That place, this place where you have this side where you have your other block, that there is a week. That week is now equal to this week, this and this. So you have four weeks now that are equal. This other one is 3 weeks. The other one now, this one now is 4 weeks. So now you've gotten equal lows here. You've gotten equal lows. They are very powerful though. They are very powerful. If you don't know it, you lose money a lot. So you have this equal low here and this equal low. So that means you must have made cash here and then price come back again. You not be wondering why, but we are bullish. It's because of liquidity. And now you can see how powerful they are. The moment price swept them, this candle close above that line. This candle here, this bullish candle that came down, that came all the way down, closed up. That that liquidity has been taken out. So all those that are actually trading, which strategy is that? Um, Let me see. Okay, okay. Those that rush and bought here, eh? Those that bought here now because they know that they are bullish, that bought from there without identifying this equal low here, this equal low that I pointed out, 1 and 3 that I've shown you earlier. Those that don't know, price will come back again and stop you out because we have equal low liquidity there. So you guys should be careful how you mark out your area of interest. Look out for equal low liquidity or trend line liquidity. If you see them, wait for them to be swept. before you enter. Now imagine this kind of trade now that maybe the person is targeting here. By the time he comes back, price has stopped him out. This is the function of equal low and equal high liquidity. If you understand them, all right, type I understand them. I can identify them. Equal low and equal high liquidity. Just type I understand them so that we can continue the class. Just type I understand them. So now, if you know that the trend, all right, and then you are buying, and suddenly price starting back, you should know that price is going to sweep liquidity that you did not see. All right. Thank you, Francis Joel. You should know that price is going to sweep liquidity that you did not identify. So so let us identify equal high liquidity. All right. We have identified equal low. So that will be in a bearish trend. So let's find a bearish trend. Okay, now um let's find. I'm just taking time to explain all this. Let's look for a bearish trend. All right. So now here now. All right. This fall from here. Let's call it a bearish trend. All right, which may be a pullback, but for now, for the sake of what we are saying, let's find it. You can see one here. We have this equal high here. They are a kind of close. If they are not very equal, if there's a space between them, a little space, we call it relatively equal high. But let me look for something, a typical bearish trend. Okay. All right. So now this is a bearish trend now. All right. We have entered into a bearish trend. Okay. Let me start from here. Let me start from this side and then we will go down. Okay. Now you can see as price broke this structure here. After price broke that structure, you expect price to pull back. Abi, that is a break of structure here. So after price now broke this structure now, okay, you expect price to pull back. That pullback, price will come and take out equal highs. You can see we have this. Let me change that. You can see that the high of that, let me expand it. You can see that the high of this week here and then the high of this bullish candle week, all right. So the high of that, of this bullish week and this bullish week, makes up equal highs there. They make up equal highs. EQ HS. So they make up equal highs, assuming that you want to sell after a break of structure, of course. You can see what price the price from them, exactly what I do. So price came back here, form one, pull back, went there, form two, And then what happened? We had a candlestick that swept them up before selling. All right. So your area of interest will be this guy, your bearish block here. All right. There, that's where you want to sell from. But now you can see that price did not tap you. So now my advice to you is that whenever you are taking your entry, don't take it exactly from that block. Okay, now for instance, now assuming you took this trade here exactly on that block, now you would have missed it. So it's better you a little bit give it a space like this, so that price will tap you. And now you can see that you have a lovely run, price run, because liquidity has been picked. So you see it now, liquidity so whenever liquidity equal highs are picked, you should expect a run. All right. Again, price pull back here. We also have another equal high here. Hope you are seeing it. We have this equal highs here. All right. We have that equal high here, which price came to what? Sweep. There is a wick that went above it. That is a sweep. But now this sweep only mitigated this fair value gap. Yeah. So you can take your trade from here, and then you have a nice trade. So these two trade now that you have won, following equal highs, and the price started to push upwards. All right. So let's find another bearish trend. Okay, we have this again. This is a bearish trend. We don't know whether it's a pullback. I'm just using it as an example of a bearish trend. This is a bearish trend. All right. For instance, what happened after a break of structure? After this break of structure here, all right. After this break of structure here, you expect price to pull back. Price gave you a lot of liquidity. The first one price gave you is trend line with liquidity. All right. Hope you are seeing it, which I have talked about. We have these all these candlestick. They are trend line liquidity. You can even take these two. Okay, these two is okay. So you see it now. You can take it as liquidity. So you have trend line liquidity here as one. You also have equal loads. Okay. Okay. We have a kind of relative equal load here. Okay, we have this. Yeah, we have this guy here. All right. So we have that guy as our relative equal load. Let me expand it. So we have trend line liquidity here. You have equal eyes rather there. We have trend line liquidity. We have equal highs there. We now have another equal high again here. Three of them, right? We have we have equal high two now. So price is telling you that it is just generating liquidity for you to know. So before you take any trade from your point of interest, other block, bullish or bearish, other block, you want to wait for liquidity formation. It's necessary. So now you will set your target, of course, the last guy here. Hope you are seeing it. Price tap you in very nicely. Now, even before price pushed all the way down, even before price push all the way down, price also form another one for you. Your ability to identify it is very important. Price form another relative equal highs for you here. this, we have this and this. All right. Price form another relative equal highs for you again to tell you that liquidity is being generated. So you want to buy above it. You see it now. So if you are even selling from here now, all right. If you are selling from here, all right, you will be very confident in your trade. Already you know the bias.